I got it. Good morning, everyone, and welcome to the pre-market analysis and trade plan setup for stealthtrader.com. It is Wednesday, October the 29th, 2014. I apologize for the lateness. We're actually going to have a fairly quick session. Got a small crowd because of the lateness. So let me just get through the disclaimer, and then we'll get going. This information is for the purpose of educating members who want to expand the knowledge and business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors can lose more than initial investment. Nobody at Stealth Trader is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see are for education purposes only. Please trade your own due diligence and your own trade plan. Okay, so I'm going to start, let's just take a quick look at the news because that's important. Of course, we've got, we had at 8:30 RMPI and IPPI for Canadians. At 10:30 we have crude, but the most important thing that's coming out today, of course, is Wednesday. It is a Fed day. We have FOMC statement at 2 p.m. Eastern, federal funds rate, all at 2 o'clock. So I'm expecting a move today. You can see my hypothesis that I put in for the Russell already into the chat room. But I'm expecting a move this morning. Not really great move or a big move, but once we make the initial move, I think we can get a sideways horizontal rotation, lack of OTF participation until we get into the Fed. Of course, you never know what's going to happen, but that's my main hypothesis, and I'll show you where I expect that to happen. So let's go through the macro to the micro first, so we do go some type of routine. Of course, we've got a very strong trend going right now on the monthly. We came down and tested the 20 SMA and then bounced back up. We're finally inside the middle of the distribution of last month. So the trend is very strong on the monthly. On the weekly, we had broken down. They came down, created a technical gap with a foo-bar, closed the technical gap on both the 9 and the 20, and we've now gotten and currently trading above the 9 and the 20 with 2 days left of trading in the month. Going over to the daily, you can see that the trend is running very strong right now on the daily. There is a naked cross down here at this 1920. I'm looking at the 1921 area, CLVN, for this to get cleared, but I don't think it's going to get closed right away. We do have a technical gap shaping up here. Price is running pretty fast and pretty hard, so depending on what happens with the Fed, I think that we could get a rotation down and close the technical gap on the daily if the Fed news is something that they don't like. Of course, the Fed snuck in some news yesterday about funding. I think it was $2.1 billion to the banks in another type of funding. So they ran out of QE, so they found a new way to do QE. Going over to the geometric chart, you can see that we've now, we're watching this the center line, the upper line of the downward sloping fork, and we've now broken out of it. Target today is this a retest of the upper line of the downward sloping fork on any type of a retrace. That would put us down into the 1962 area. Of course, if we do get another major rally, I doubt it's going to happen today, but with Fed, you never know. We've got that 2010. Remember the rule of 10 coming up on that 2000 mark, and of course, we've got the all-time high up at 2014.50 and the RTH high at 1275. There is this energy point, and I want you to pay attention to this energy point because this one's likely to play out on any type of move. This doesn't come into play until November the 3rd, so next week. So, we could easily, chop around in here and then come down here, or come all the way down here and then come up and test it. So I'm really watching this energy point at the 1956, 1957 level. Going over, let's take a look at our intraday trends to see if there is any. I imagine they're pretty much all going to be what they were. You can see that 4-hour trend is still running extremely strong. Great slope, great separation. We keep creating these technical gaps and closing them out, and then continuing and getting continuation. On the 30-minute, same thing, consolidation on the 30-minute. We just sort of chop around this balance area that we're around right now. Going down to the 5-minute. 5-minute, we've got, we have a trend after going and making that high at 81. I sold out right here. I sold out at 1980 here. I just couldn't stay up any longer. And then, we came down to this, 7650 level, and then rotated right back up and made the new high and hit the target I was hoping to hit, which is the 8150. Then we sold off, created a beautiful technical gap, rotated back, and basically sold off. Now we've got a trend starting again to the upside. So let's go take a look at the big picture. We're just going to take a quick look at this picture. This is the Russell. I'll post this picture. I posted the hypothesis for it already. Right now, we've got this this distribution, and accumulation zone. And we've come up, and you can see that the value area lows on both the microcomposites and the value area high of the microcomposites, they're all lining up at 46. So to me, 46 is the line in the sand today for the Russell. If we can hold above the 46, I'm looking to go up and test the value area high, the CLVN, and the range high, all sitting up here at that 48.30 area. And then if we can break above that, the main target above is this 53 area. 5280 is the microcomposite VPOC from inside of this distribution zone. And once we get up here, I'm expecting a rotational day up in this area on the Russell. If we do get a big move to the upside on the FOMC, your upward targets is this 60-70 area, the 67 area. That's going to be an important level right there. 6620 CHVN, 6740 microcomposite value area high, and then anything above that, the main target above is 73. Don't upward target. Below 46, then I'd be looking for a move back into the 34-35 area, and then with possible responsive buyers stepping in here at this 1130-180. Below 3180, then I'm looking at 25-26 area. But the key is going to be this 2170 again. Anything below 2170, you might as well sell into this 1160. This is the composite VPOC. So that's what I got for the Russell. Let's take a look at where we are on the ES. And the ES is kind of similar. We've got this 7650. We're back up inside of this distribution zone in around the microcomposite VPOC at 1986.50. We're just struggling to get over this and hold above the CLVN. Remember how key the CLVN was? We were trading off of this 1980.25. Well, it's back as resistance. And if we can get above that, then I'd be looking for the move this morning, the continuation up to the 86.50, and then chop in this area until FOMC, and then extended targets if the FOMC meeting is strong. You've got the naked close here at 90.75, 91.50 CHVN. The big resistance will be up here at 95.50. Anything above 95.50, I think we test the 2000s and this where they tried to hold value after making that RTH high at 2012.75. There's a naked close here as well, so basically 1202 to 1203. And again, I don't think we're going to get there, but you never know with FOMC. I've seen some big moves off of it, and certainly have the volatility and the range to do it right now. Below 80, I'd be looking for a rotation back to test the 50% retracement of the significant breakout candle. That will be, need this chart over here. That will be down here at the 1970 50. You've got the value area high that we left. There's this slush area between 73 down to basically the value area high at 71 that I'd be very careful of here. This is going to be a zipper line. I think we get below that, we're going to see a quick move down to that 71. Let me just open this up a little bit better here. So from 73, if they don't find responsive buyers down here at the 73, 75 CHVN, and we get into the zipper area right here, there's repair that needs to be done here. Look for them to move quickly down to test the 71, and I'd be really watching the 70, 75 value area high. Below 70, 75, your targets are pretty clear. Let's just get rid of all this right here. I'm not going to draw my targets or anything like that right now. Do I have time? I have time, so let's do it. Okay, so our key line in the sand above is going to be, I said 80.25 because we've got the range high from yesterday at 80.75. It is going to be 80.75 down to 80. Don't want to get short until I'm below 80. Don't want to get long until I'm above 81. First target above is going to be 83.50. And then, of course, you've got the big targets, and everything's all set up to the top here. 86.50, 88.75, CLVN. Then you got the naked close at 90.75, 91.50 on the CHVN. And then above there, you got basically 95 and the 2000s. Perfect, all set up. Don't have to do much today. And then if we reject this and we rotate back down, our first target below is going to be this area right here at 77. I'm going to use 76.50 up to 77. I don't want to do this yet. We'll do it this way. 76.50. So that basically encompasses that range. And then below that, then I'd be looking for a move down to test the closing swing low down here at 74. It's really 73, 75, but I'm going to front run it because that's the closing swing low. And then anything below the and I'm going to put this as a double trade area down here because it's got to encompass all of this. I got to give me a slush zone button, and then if we zip down here and we find responsive buyers down at the 71.75, we could rotate, but don't take the long off of the 71 area. wait for it to get back above the 73, and then target that 74 area for your first scale. Below here, we get below that 71. This is no longer valid, so I'm going to take this out right here, the 68. The first target I'd be targeting, and I think that's the target you got to look for. You could use the 69, 75. There's the LDN right here, but you know what? Yeah, I think if we get back inside of value, we'll get a bigger move down. I really think the target's going to be down here. Actually, what I should do is see where our overnight high and overnight low is. Sorry, I was up late, didn't get to do all this. Where are we here? 74.50. Good to have that target. That's our overnight high is just above that at 74.50. I'm sorry, overnight low. Low 74.50. And then our overnight high is at 81.50. So that's going to be your first target above the range. So targets down here obviously is the naked VPOC at 66.25. Then you have 63.25. I'm actually going to use 64.25. Because this is where the buyers stepped in the last time. I'll worry about pushing through, because if we push through, I think it could come down and test the open and the value area low down here. So that's my trade area down here, and then below that, I'm going to be targeting this 59.25 area again. 59.25, 59.50. Is my target below there. I'm not even going to pay attention to the 61.50. I'll front run that because I think 59 is a much stronger number with the naked close right there. Come on. 59.25. And then, of course, we've got our areas below us at 57.25 naked close, and our overnight low is not needed there from the other day. The 56 area, and below that you've got 54 and 53.75 with all our regular targets. This is no longer going to be a zipper zone, and we're going to use the 49.25. And then below that, 46, the 43 area again. This is not going to be a zipper. And below that, 39.75, 36, 30, 28. Okay, it's all there. Perfect. Sometimes you just don't have to change your numbers. So that's what I'm looking at. Let's take a quick look at what it looks like on the Renko. Look at how wide that sucker's gotten. So center line is sitting at 78.25. Man, that 78.25 has been driving me up a wall. In fact, you know what? I'm moving this trade area up here so it encompasses that 78. 78 was frustrating last night to me because I had to sit through all of this and kept on hitting the 78, then coming down, and then it got above, then it kept on coming down. So 78.25 is the Keltner center line. A move to the upper Keltner is going to take us up to that 84.50. We're front running it at 83.50. Likely be 86 by the time we get there. That's CHVN 86.50. And then below the center line, a move down to the Keltner lower line is going to take us down to the 72 area, that zipper line. And I would watch if this sets up as a Renko reversal with a possible lock the line. that walk the line is going to be a nice walk the line. If it sets up here, you get your Renko reversal up to 74, and then come down, close below the Keltner, and walk the line down to 71.25. That'll be actually a pretty nice setup. Anyway, 19. Let's just take a quick look at gold. We've come down and we're testing the range low right now. Actually, I should have adjusted the rate. There's the adjustment to the range low. We're below that. This doesn't need to be there. Redraw this. It's going to be 25. And then I like 2060, so I mean if we break out of range, I'm looking for that move down to 18, especially if we get a move up today versus down. Let's see where balance is in the last 3 days. Still up at the microcomposite that we're running right now, so nothing changes there. Let's just go for 2 days. Sometimes you don't want to work with me. I'll just get rid of you and draw them. Yeah, so nothing changes. This whole thing is still all centered around this 29 microcomposite. So if we get below the 21 area, and I would really use this 2080, look for a move down to 18. If we get back above 25, look for a rotation back up into 29. Not expecting much. I mean, I think we're going to hit this 18. If we get good news on QE and they pop, I think we're going to see the 18 level again. Possibly even come down to this 1209 to 1206 area on any real devastating or any big move to the upside on the indices. Anyway, that's it for me. As always, trade well, trade safe, and we'll catch you on the flip side.